We have a double set release of data coming out in just moments. About 4.5 minutes, we're going to get the data release, retail sales, and PPI numbers. Now, PPI has been a big deal following CPI releases. To be clear, CPI is the Consumer Price Index measure, and I'm going to give you the estimates in just a moment. PPI is the seller's side. So think about it. If the survey is being conducted, if you're doing the CPI survey, you go into the store. Hey, how much is the product in the store? If you're conducting a producer price survey, you're calling up a producer saying, hey, yo, how are your wholesale input costs doing? Are they going up? Or are they going down? On top of that PPI number, we'll get retail sales data today, which is all a very big deal. So first, let's go through some of the estimates. Producer price inflation, final demand estimate, negative 0.1. That's a big deal. I'm going to go ahead and put this up on screen here. So we've got month over month, negative 0.1% for PPI. And then we have X food and energy is expected to be, so this would be your core month over month, is expected to be 0.1%. If you take out trade as well, you're expected to be at 0.2%. Fine. Final demand year over year is expected to be 6.8%, with core year over year at 5.6%. So those are pretty important numbers. All of these coming out within the next 3 minutes at this point. Welcome. Thank you so much for being a member of the channel, Black Girl Meet World. Appreciate it. Okay, then retail sales numbers are expected to basically be negative across the board. Retail sales month over month are expected to be negative 0.9. That's actually a really big number, because if you think about negative 0.9, negative 0.9 times 12, an annual rate. Don't use exponents, by the way. People mess this up all the time. See it in the comments all the time. They're like, come on, you must use exponent. Like, no, this is the speed we're going at. This is not compounded, okay? Anyway, 0.9 at an annualized rate is 10.8% retail sales decline. So that would be good for inflationary pressures if we get some kind of number like that. But so far, consumers are doing pretty well. I got a big video coming out later this morning about a soft landing versus hard landing. It's going to be a long video, but I highly recommend, if you're watching this video right now and you have not seen the other one yet, open a tab, just type in Meet Kevin, soft landing, epic market disaster. It'll be some kind of title like that. Really, really insightful about soft versus hard landing, and some stock picks potentially as well for either of those scenarios. So that'll be really cool. So we'll talk about that. Really appreciate y'all being here. I want to be clear also that I've made some changes recently, and I think they're for the better health of the channel. I'd appreciate your commentary down below, though. First thing, I'm focused now more on very informative videos and longer videos. I will be putting timestamps in the bottom of videos, probably other than live streams. So that way it's easier for you to kind of, if you just want to watch shorter stuff, you can. But a lot more information, longer videos, trying to make it a little easier for you to find that data as opposed to having too many videos. I think that'll be easier. In addition to that, I have moved my course member live streams to 6 a.m. So California time, 6 a.m. course member live streams. And we'll do fundamental analysis, technical analysis, trading challenge. Everything will be done at 6 for about 45 minutes. Every day the market is open, which is great. And we will have a large price increase on those programs on Building Your Wealth coming on the 30th. So that's about 12 days away. So mark your calendar for that. Milk some more stock gains maybe, but mark your calendar for that. That'll be a big change as well. Okay, we are now 25 seconds away from the data. So I'm pretty anxious here. So these the PPI numbers are going to be the first that I'm going to read out. Well, I'll probably read them out as they come in. But if we have a PPI miss and we get a positive number, stock's gonna go down, baby. Oh, it's gonna suck. But so far, the trend has been, let's keep it going negative. Keep it going negative. And this is going to solidify the 25 BP hike for the Fed, I think. Here we go. And retail sales come in worse than expected. Oh my gosh, it's all plummeted. This is great. This is great. It's actually really good. PPI final demand comes in negative 0.5%. The expectation was negative 0.1. That's amazing. You met the expectation for core at 0.1. Minus trade came in less than expected at 0.1. Holy crap, year over year plummeted. Oh, bullish, man. Wow. It was supposed to be 6.8. It came in at 6.2. X food energy trade year over year matched at 4.6. Retail sales come in worse than expected, negative 1.1% versus the negative 0.9% expected. Retail sales X, holy crap, dude. Oh my gosh. This is like the Fed should pause, man. Holy crap. Retail sales X auto month over month, negative 0.5 expectation comes in at negative 1.1. Holy crap, that's off by a factor of 2 in a bullish way. Retail sales X autos and gas were supposed to come in at 0%, came in at negative 0.7%. People aren't spending anymore. Like here's your recession. Okay, Fed, you're done. Dude, this is going to plummet inflation expectations. This is such good news. Retail sales control group comes in also more than twice as bad as expected. We were expecting negative 0.3. We got negative 0.7. PPI final demand, again, coming in at negative 0.5 versus the negative 0.1 expected. Oh, and a downward revision on the prior. Holy crap. Everything got revised down on the prior. Oh my gosh. What is going on? PPI final demand month over month for the prior read was 0.3. And I remember markets were pissed about that 0.3. Guess what happened? Revised down to 0.2. Prior read on core PPI month over month was 0.4. Everybody was pissed about that the last read. Guess what? Revised down to 0.2. Retail sales prior month, negative 0.6. Guess what? Revised down, negative 1%, almost double as bad. X autos, 3 times as bad. The prior was negative 0.2, revised to negative 0.6. This is insane. Oh yeah, the stock market is loving this. I'm just looking at QQQ right now, and you just talk green shoot, baby. Holy crap. These numbers are freaking nominal. Absolutely insane numbers. Tesla's up 4% in pre-market on this. Holy smokes, these numbers are this is really insane. I want to see what the suits are saying on this, but these numbers they would be called a miss because they came in lower than expected, right? But they're like bullish. It's a bullish miss. This is absolutely shocking, especially after CPI just met expectations. I thought maybe we would have gotten meat here, but this is such a big miss in a good way. Euro-dollar futures yields extended their declines after big data dump, which showed retail sales subtracting more than expected. PPI substantially below expectations. This should drop yields. Let me look. I want to see instant market reaction. This is insane. It's so good though. So good in such a good way. Oh man. Okay. All futures green. Dow up 0.09. S&P futures up quarter. Nasdaq up just a little over a third. Bonds plummeting on this. Oil still up a little bit, but that's because of some of the European forecasts. Let's got some work to do with that in China. But and these can like shell shock a little bit. They can be a little shell shocky, right? But 10-year here, 3.44% basically, down almost a full 10 basis points from yesterday. Big deal. So again, to me, folks, somebody here is asking, have we seen a bottom? Like, I don't want to say it, but let me just say, if I was in person with you, I'd probably grab you and be like, "This is it, baby." But I wouldn't do that on YouTube. I have to be professional on YouTube. So no, this is look, there's always a risk that in the future inflation data comes in, bad again. And that's what I said that right before the data came out. I'm like, I'm worried that we get a miss up because then stocks will tank, right? This data, this slam dunk Worst case here, 25 BP. We might even be getting a Fed pause in March. These numbers are terrible, absolutely terrible for the economy, but absolutely great for inflation. Again, I want to just reiterate some of these numbers here in case you're just now joining. This is insane. Okay, this is so insane. David Risk here, love the last name, says it's time for some Tesla tequila. I'm game. Come over. Let's go. I have a bottle of Tesla tequila. I'm ready. Let's drink some on the PP. Although what the hell, my PP went down for maintenance already. I guess that's what happens when you own a plane. Some stupid thing about the windshield defroster. I'm like, we don't need that that junk. And I'm like, how much is a new windshield? How much could it be? And they're like, it's $100,000. I'm like, that's not what I wanted to hear. But anyway, so I want to reiterate this. Retail sales. Jeez, man, this is insane. Okay, compose yourself, Kevin. Compose yourself. Retail sales. Okay. Expectation, negative 0.9, comes in at negative 1.1 with a big revision on the last from negative 0.6 to negative 1.0. We are going to go, in my opinion, to the second half of this year, and we're going to be staring deflation in the face. I understand people regularly leave these comments, and I just want to shake those people because I'm like, you don't understand. And it's fine. Like it's fine if people don't know, but I want to help you learn, okay? Inflation, and this is so important, inflation may go up. Your hamburger may go from $100 because, our dollar is basically worthless now. You may go from $100 to $110. That's 10% inflation, right? But if it goes now from 110 to 110, let's say, that's 0% inflation year over year. You have to remember those year over year numbers. You go to 111, that's less than 1% inflation. I actually think there's a very real possibility we could be staring deflationary numbers in the face very, very, very soon. We'll just wait for those housing numbers to tank because they will. I've been warning about a housing market crash since January of 2022 when I dumped all my real estate. Well, it took me like 4 or 5 months to dump all my real estate, but I'm happy I did. Anyway, these numbers are so good. So, okay, again, reiterating, negative 0.9% on the survey. We got negative 1.1. We got retail sales core, that's X auto, twice as bad as expected, negative 1.1 versus the survey of 0.5, triple the revision of negative 0.2 to negative 0.6. I'm not going to go through all these numbers again, just rewind the video, but this is very, very incredible. What I do want to do is actually look at the producer price index report, and let's look at some of that. But holy smokes, this is incredible. PPI. We'll go ahead and pull this up. I also want to see what other commentary we're getting here. Retail sales were weaker than expected across the board with downward revisions to prior figures as well. The monthly change in control group sales was the lowest since December of 2021. Wonder if there's a seasonal adjustment at play. However, this is exactly the kind of softening in demand the Fed is looking for and will be welcomed. Meanwhile, PPI core aggregates came in a bit lower than expected. A bit lower, a lot lower. Obviously not as important as CPI, but still shows deteriorating inflation. Duh. Future spike after this. This is very, very good. Very happy about this. So sell or buy. It should be obvious. Oh, okay. Look, in my opinion, and I have been of this mindset for way too early, but I have been of the mindset that inflation will plummet. That plummet is starting to happen. I think if you position into companies that have high free cash flow, margin, like pricing power, you could be in a good place. And we could see some very rapid movements in the stock market. Keep in mind, it was just Morgan Stanley yesterday. Morgan Stanley yesterday said there's a lot of cash on the sidelines, a lot of cash just waiting to be put to work. And I'm not here to advocate for like YOLO call options on stuff. I'm not going to do that. But I think the best thing that could be done now, the cheapest, in my opinion, is owning shares. I mean, if you can own an actively managed ETF that can rebalance when things run, big fan of that. Pricing power style, big fan of that. I just want to be careful of money losing companies. I was looking at Roblox quite a bit the other day, and I can't get past how their expenses are skyrocketing, and their revenue doesn't match that. So that makes me nervous. But let's look at the actual PPI report here. So let's see here. Okay, producer price index declined 0.5. Remember, the expectation was negative 0.1. We got 5 times. This is so great. In December, the decrease in final demand can be attributed to a 1.6% decline in prices for final goods. Goods deflation is here, baby. This part's not as good though. In contrast, the index for final demand services rose 0.1%. Oh, but that's not that bad actually, because 0.1 times 12, that's only 1.2% inflation. Oh, that's actually really good. Oh, that's good, because services inflation takes a lot longer to tumble, right? Okay, really quick note here. I get this question all the freaking time. People are like, Kevin, why are companies that are going bankrupt like skyrocketing? Momentum. That's it. You get in the news cycle, you get people making YOLO bets, and there's very thin order book volume because the people who were going to sell have already sold. So that makes it very easy to run up the order book of sellers. And it makes it very easy for these to meme stock and momentum up. It won't last, okay? Party City, Carvana, Bed Bath & Beyond, all this garbage that's going to be Open Door, all that garbage, please to God, do not hodl that crap. Like, play the meme stuff, play the momentum stuff, but and no guarantees, obviously, but I am of the opinion that it is a terrible buy and hold, and they're going to go to zero. The problem is you have this crazy mentality of what happened with Hertz. Hertz goes bankrupt, the stock skyrockets. Why? Because they got overbid in bankruptcy court. Now, why would a company get overbid in bankruptcy court? Because they had gold, baby. They had gold. They had used cars when nobody had used cars, and used cars were like doubling in value. So the company became a lot more value because of the assets it had. That's not true for Revlon or Party City or Bed Bath & Beyond. These companies are trash. They're going to zero. Sorry to be blunt about it. Make your money trading, but get the hell out. Not financial advice. Anyway, prices for final demand, less food, energy. Okay, fine. Final demand prices for move down. Largest decrease since falling. Blah blah blah. Okay, whatever. Wait, this is actually an interesting line. Final demand prices for final demand goods moved down 1.6% in December, the largest decrease since falling 1.8% in July. Wow. Leading the December decline was demand for energy, but we also had core drop. Prices for final demand foods, oh, thank God. Foods finally coming down 1.2%. Index for final demand goods, less food and energy actually advanced 0.2%. Not so great, right? 0.2% is about 2.4% inflation. Nearly half can be declined or traced to a 13.4% decline in gasoline. The indices for diesel fuel, jet fuel, dry vegetables, blah, 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 also fell. Thank God. Chicken eggs moved higher. Yeah, we keep hearing that about eggs. But again, I even though a lot of this is attributed to energy and food, remember, you could look at retail sales ex autos and gas down down 0.7%. And if you look at PPI, X food and energy, you're up 0.1%, which is only 1.2% inflation. Huge disinflation, right? Huge disinflation. A major factor in the December increase in prices final demand services was a 17.6% jump in margins for fuels and lubricants. Really? Fuels and lubricants are now services? Retailing. Okay, interesting. Airline passenger services, inpatient care. Okay, that's always the red flag recently. Hospital care. I would talk about that in my video coming out this morning. And wholesaling also moved higher. Airline passenger services, that makes sense. The index for residential real estate loans, machinery, and guest room rental also fell. Aha! Aha! Ha, ha, ha. I've been talking about this coming Airbnb bubble, the vacation rental bubble. I highly caution you to stay away from vacation rentals over the next year. I have a real estate startup, and we are conducting a lot of data and research on a regular basis on this, and we are very nervous about a vacation rental bubble. Very, very nervous about that. That's going to create opportunities, but you don't want to catch a falling knife on that one. By the way, we're also, oh my gosh, we have this like, we're going to do something so insane with House Hack, my real estate startup. Before we announce, or probably around the time that we take our Reg A investors, which basically means non-accredited, when we open up for the non-accredited round, we're going to announce our new like game plan, and it's insane. It's so good. I'm so excited. Like it's like we're all like shaking with excitement to share it. It's gonna be very, 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 very exciting. Anyway, what else do we have here? So this is this shows us over time here. Adjustments. This is not so fun. This is boring. Processed goods for demand, product detail. Nearly 2/3 of the December decline in index for processed goods can be traced to a 27% drop in diesel fuel. Again, yes, the big negatives are from fuel. We got that. But even without fuel, massive disinflation, which is fantastic. Production flow. Okay, prices for stage 4 intermediate demand declined 0.3% in December following 4 consecutive increases. Thank goodness. Prices for total services input rose 0.3%, not so ideal on stage 4. These are different stages of production, which they define. It's not so important. It's just I'm trying to just point out where are we seeing issues still, because I know that's what the Fed's going to be looking at. Increase in prices for gross rents for retail properties. That's going to plummet. That's the thing. Every time you see housing and rent stuff like office rent or whatever, it's going to go down, baby. That's good. Decreases in prices for jet fuel. I really like to hear that all of a sudden. Like that really hits home. It shocks how expensive it is. Okay. Gross rents for retail properties, right, outweighed by increases in growth, right? Another indicator here about rents. That's fine. We expect rents to plummet. Not a big deal. Okay. All right. Let me see a little bit more of what is Wall Street saying. So a little bit more on Wall Street. Welcome aboard. Thanks so much for joining. I was literally about to get in and buy an Airbnb, but after seeing how less and less people are renting them, I decided to stay away. I might invest in one later, but it would be after this recession. Yeah, it doesn't have to be after the recession. Like it just later, right? Like it's okay to buy stuff in a recession. Just wait, not yet. It also depends on when the recession is, but no, that's a smart move. Okay, so pipeline inflation is tumbling. Retail sales tumbling, producer prices plunging the most since the COVID lockdowns. Spot gold gains after economic data. Yeah, that's because now you have fears that like the recession's here. I got to look at pricing for the break evens. Please tell me the 5-year break even has plummeted. Please, 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 please. I want it to be at the lowest level yet. Line chart. One sec. I highly respect Cathie Wood, but I will not invest. And I know she's offended by people saying this. It's just a different strategy. It's no offense to her, but I get very nervous about innovative companies that are not driving a cash flow profit yet, because I think in a recession, they have to dilute their shareholders or get expensive debt. That's it. I'm not saying that profitless tech companies are bad. I'm just saying, I think they're not as good for a shareholder as really profitable tech that is sold off, right? So that's why my thesis in pricing power is looking at companies that have high free cash flow, high margins, high growth, and even if they have to reduce production a little bit or reduce prices, they still have relatively more pricing power than their competitors, but they're cash flow positive. So that's my thesis. Hers is a little bit more open to, for example, a company like Roku. Good company, in my opinion. I won't invest in them. I don't like their strategies. It's just different strategies, right? And there's nothing wrong with that. Again, big fan of her as an individual. I think her company's great. I think her researchers are awesome. I would love to do more interviews with some of her researchers or her or anyone, really. I'm so fascinated. You know, their strategy could end up being best. It's just a different strategy, and it's okay for people to have a different opinion. So what I do think is laughable, though, and this is where I completely agree with her. What I do think is laughable, though, are people saying things like, you know, like anybody investing in tech, which tech has underperformed or whatever, is an idiot or a bad investor or whatever. It's like, no, it's just a tactical trade that's happening in markets right now, right? It makes sense for institutions to tactically move away from growth and innovation into staples or energy or healthcare. But as tactical, the nature of tactical trades work, that's expected to reverse. And that'll be quite glorious. Of course, you don't want to go all hopium and start going call options because they're quite expensive. But anyway. Okay, here Uncle Jesse says deflation is good. Interest rate pause or go down next if this keeps up. Yes. So the 5-year break even has not changed yet. It is still at it's probably at the second lowest point this year, but that'll probably change as the day goes on. It usually does. If I look at 10-year treasuries, they are now, wow, down 11 basis points. That's incredible, although that could change as the day goes on. I'll look at Goldman Financial tightness, Goldman Financial conditions. They probably haven't moved yet, but we'll see. Goldman Financial conditions. Nope, they haven't moved just yet. That's fine. U.S. data supports less dovish Fed. I think they mean more dovish Fed. I think they wrote that wrong. PPI came down, which is what the Fed would like, but weakening economy seen in retail sales won't be greeted as good news. Well, okay, maybe for stocks. Both readings, though, argue for a less hawkish Fed, so that should support stocks and a weaker dollar. Yeah, well, the dollar was ridiculous. Actually, keep this in mind. This is another important thing for you to know. And personally, I think it's little tidbits like this why you want to watch my videos in full. I'm not trying to pat myself on the back. I just think nobody else is telling you this crap. But then again, I don't really watch anybody else, so maybe I'm jaded. So I believe that, first of all, look, we know the dollar's peaked out. Okay, I've been shorting the dollar since last summer. I said there was another possible 11% downside. We had roughly that. Ended up taking my tendies on the dollar short when it really fell, like about a month ago. But anyway, the interesting thing about the dollar falling is it really benefits companies with a lot of foreign exposure. So if you look at a company like Taiwan Semiconductors or Nvidia or AMD or Tesla, or even Apple, what do these companies have a lot of exposure to? Foreign markets. Huge exposure. Look at a company like Tesla, sells like 45% of their cars outside the US. So if the dollar weakens, you actually see stronger sales. These have been, like, the strong dollar has hurt earnings at so many of these US companies. So a weaker dollar is actually great. Okay. And yeah, I would not be surprised to see a pretty strong move in markets today. By the way, just a little shout out here. I would not recommend buying ETFs in pre or post market. Okay, just saying. Wait until the market is open or closed. Unless they're like super highly traded. But usually the liquidity in pre or post market is just terrible. And so you get really ugly dislocations. So brief look here because we're going to go to our course member live stream in about 5 minutes. I got to make another cup of coffee too. Seriously, by the way, and like seriously, if you buy just one of the courses, you get lifetime access to those course member live streams for however long I do them. At some point, I imagine when I'm like 50, I'm going to be like, I don't want to do it anymore. But for however long I do it, you get lifetime access to those. And what's great is if you're ever interested in a stock, what a lot of course members do is they just type in, they're like, oh, has Kevin done an analysis on ticker, blah, blah, blah. And they're like, oh, yeah, he did. He looked at the earnings. It's great. It's a great resource, I think. And that's even beyond all the lectures you get with the courses, which is great. I don't know what happened to Arcimoto here, but I'm very curious. I don't know if this is just like pre-market liquidity issues, but Arcimoto got destroyed here. I have been concerned about Arcimoto. Briefly, if you are an Arcimoto investor, I recommend you type into YouTube, Meet Kevin Tech Arcimoto, and you'll actually see an interview that I do with the CEO. And I'm like, look, why aren't you guys like building, like focusing on this idea of like coming up with the design and letting other people manufacture it? I don't think this is the right direction. And so I've been a little bit bearish, sadly, because of that. And I want them to win because they're the nicest people ever. But nice, unfortunately, doesn't get you market gains. So if I go to, let's look at Archie News. Futbucker. God, why do I say this out loud? Is so nice to remind you that this is the biggest coupon ever now with a price guarantee. That's true. 3-month price guarantee. And honestly, it'd probably be even longer than that. Okay, so Arcimoto, see, they're offering 4 million shares. That's what I'm telling you. That's what I'm telling you. Okay, this is what happens. Nobody believes me. But when you look at profitless companies, what do they have to do in a recession? They have to print stock, and it dilutes shareholders. And then the damn stock drops 60%. So people that are like, oh, but Kevin, you know, Roblox has a higher user base of users or whatever. I don't care. I'm not going to buy it. Why? I don't care if it goes up 50%, because what happens when they issue, you know, multi-millions of new shares because they have to raise money because they keep losing money. Although they do have a good cash, a good balance sheet. They just have a lot of money going to stock-based comp, which is also dilutive, right? You just have to be careful. So Roblox is maybe not the best example. Maybe I'll use Roku as more of an example. But the point is, you go into a recession, people need cash. So what do? You issue shares. The whole point of the stock market, I think people think the point of the stock market is so that you can invest in companies. Wrong. The whole point of the stock market is an opportunity for companies to raise cash. That's the whole point of the stock market. You know, obviously, then there are side benefits like incentivizing employees with stock-based comp and blah, 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 or being able to buy back when stocks are low. Whatever. I got to go. Yes. Thank you for being here. I appreciate you. Leave me comments down below with your thoughts, by the way. Like, let me know your thoughts on the sort of like 6-hour seminar idea. If you're willing to go to something like that, maybe what you'd be willing to pay. Let me know your thoughts on maybe like, hey, what are you looking for in the courses? Why are you not considering joining, right? Is it just timing, recessionary times? You know, even though that's probably the best time to learn and educate yourself, let me know. Okay, I got to go make a cup of coffee, which means I'm probably going to be like a minute late for the course member live, but I'll be there shortly.